What's going on, everybody? Good evening. What's going on, SK? What's up, Norman? VST, yeah, VRT had quite the day, didn't it? VRT, wow, it was up 15%. I didn't realize it was up that big. Wow, that's insane. That's pretty cool. VST, nice. FTAI, nice. Look at this, Norman. What did I tell you? Long on retest, 522.24. That was right, 522.24. I said long on retest. Stock double. Welcome, Norman. Yeah, let's take a look at crowd. Yeah, we'll get into it in just a couple of minutes. I'll explain the class for the evening, but for now, we'll take it easy. Yeah, crowd's been one that I haven't been able to bring myself to get long on recently. I got in it a long time ago on this day here. I got long on it, and then I cut it, I think, somewhere around here. I just didn't really like the follow through at this point, so kind of got over it. Realistically, I should have re-entered probably right here, but I didn't. So I've kind of just been avoiding it, honestly, as of recently. I've been focused on sectors that I deem to be a bit stronger, but I like crowd, honestly. Yeah, I mean, if I was already in it, I'd be really happy right now, but yeah, I'm not. I sold for break even. So that's on me. In terms of getting long, if you get a dip to 323, yeah, I mean, that's a bit of a steep pullback from here, at least for the short term. I would be impressed if we got that, honestly. I think he might be a little bit aggressive with that target. Um, just to be frank and honest with you. D-Dog, let's see, D-Dog. Oh, yeah, this is what we were talking about, Norvin. Yeah, here's the breakout today. It's time. Look at that. I hope you're in there, Norvin. Look at this. We charted this out last week, I think. Never came back down to retest the point of control, but this is it's time for D-Dog for you, buddy. A firm, yeah, I mean this one goes without saying, obviously. That's an incredible one. We'll take a look at a couple more names in a bit and talk. This is pretty much in line with the theme of the lecture, though. So this is great that we're covering this already. Let me pull something up real quick. All right, how's everybody doing tonight? We're gonna give it just a couple more minutes before we get going, but yeah, how's everybody's week been so far? We're doing lectures on Tuesday, so I don't get to check in with you guys at the middle of the week. We're just at the beginning. So, how's everybody feeling so far? Everybody doing well? All right, Lando. Pretty good. Didn't trade today though. No worries. Freezing here in California. Yeah, it is getting cold. Where are you located at, Ninja? I'm in San Diego and it's cooling off for sure. Gustav's feeling good. AV go for NVIDIA ER. We'll look at that later, Norman. Smirks is up. I like to hear it. Oh, you're in NorCal. Yeah, I bet it's getting cold up there. Big storm starting tomorrow. You around the area, William? Oh, you're in Bay Park? Oh, no way, dude. I grew up in Claremont and I'm in La Jolla now. I have never met anybody in the server that lives that close to me. I've met, well, not met, but Norvin's in Temecula. I met 1K's out in East County. Some people I've met in here that have been in like La Mesa and stuff, but never anybody that close, dude. Where out in Bay Park? I mean, obviously you don't have to expose your current location in the chat. It's okay if you don't want to. I'm mostly just curious, so I can't help myself. All right, in the meantime, oh, high dive. Yes, that's It's on Marina, right? I think. Yeah, if it's the one on Marina and it's the one with like the patio area and it's like red, I think I know where that is. We'll have to pull up there then. All right, let me send out this one more message letting everybody know we're getting started. Um, cool. All right, everybody. Welcome in to the lecture for the evening. The topic of the lecture tonight is called trends. However, as I've been kind of doing with the last couple of lectures, I plan on just focusing much more on real world examples rather than the basics. So I'll introduce kind of my trend following system. I'll talk about things that I'm looking for. But at a high level, I really want to focus on forming trade ideas and talking about the most significant and important trends to be mindful of in the marketplace right now. There's a lot to capitalize in the market. I mean, this is the most significant rallies we've seen in a really long time. It's been a really fun market. Don't mistake you doing well in this market with being a genius trader. Just because we're trading in a raging bull market doesn't mean you're a good trader, and that's something that we all need to remind ourselves of. Can't get too coffee. Can't get too coffee. I can't talk. Can't get too cocky. Can't get too confident. Anyway, that was my little aside to get it started. But again, topic of the lecture is trends. As always, let's just start with a little bit of the basics here. I don't have the PowerPoint up tonight, but in general, let me just get a clean set here so we can see everything a bit better. I'll ask the question before I get too deep into this. In general, to everybody, how could you define a trend? How could you look at a chart and know what the trend is? Like, how do I know what the trend of this specific chart or asset is? What can I point to and say, yep, this trend is this direction? What are some thoughts that come to your guys' mind? SK, higher highs, higher lows. What else? Viral, higher lows, higher highs. Lower highs, lower lows. Yep. If this chart had that, we could say that this is a downtrend for sure. Yeah. Draw a vertical line to the moon. All right, Norman. Yep. I wish I was smoking what you are. Yep. See if something's in a range. Yeah, 100% agree with you guys. Fundamentally speaking, right, a trend is as simple as identifying higher highs. Wow, I really can't talk tonight. Higher highs and higher lows. And for those of you who haven't heard those terms before, let's say, for example, this is the initial high for a reference point, and this is the initial low for some reference point. When we call, this is the initial low. When we call something a higher high or higher low, that means that price increased further to the upwards direction, I'll say, than it did the last time it set a significant high. And same idea with a higher low, right? The next time it puts in a significant low, it is larger, or I don't know how the best way to say this, but it is a higher low. It's hard to define this without saying the exact words, but essentially the low that is put in is of a higher price or dollar value than the prior reference low, which is really just a complicated way of me saying the current low is higher than the previous one. Trying to define the term without using the term in the definition. So for example, this would be another example of a higher low. And oops, this would be another example of a higher low. This would be an example of a higher high right here. This would be an example of actually, I guess we'll just call it an equal high, which I don't want to confuse anybody, so I won't even call it anything. Here we have an example of a higher high and another example of a higher high. So this is the most basic way to identify a trend, right? In this case, we're looking at an uptrend. If we inverse this chart, it would be a downtrend, right? Very simply put, price is very clearly moving in a single direction in this given chart. And the reason that trends matter, especially to us as options traders, is generally speaking, trends are going to be where we make the most money, right? When a stock is outside of a range or outside of a longer term consolidation period, that's when long-term extended moves can really take place, which obviously option traders can make just as much money in a range as they can in a trend. So I guess speaking more generally here, traders at a high level will typically make more money when the market or individual asset is in a trend rather than a range. Now, again, don't treat that as the Bible. That doesn't mean that you can't make excellent money, sometimes better money in a range. It just doesn't typically suit most individuals trading style the majority of the time. So with that in mind, identifying a trend is incredibly simple, right? It really doesn't take much to look at a chart and say, yep, I know the direction of the trend, right? Anybody can do that. You can give this chart to anybody and they can tell you the same thing. With that in mind, right, that's the basics of determining what a trend is. We don't need to go any further than that. With that in mind, there's a couple other things that you could potentially look to determine what the current trend of a given asset is. So if I zoomed out and I could draw a trend line up and price was continually acting supportive at this line, we could say, yep, price is probably in an uptrend. And I could maybe even draw some other lines, maybe something like that. But you could say, yep, looks like price is respecting this uptrend. The last thing that you could be mindful of is the moving averages. And this is a concept that we've been talking about really, pretty heavily for the last couple of months, is using these exponential moving averages as short-term trend gauges. This moving average ribbon that is green and red represents the 10 and 20 exponential moving averages. And generally speaking, when the 10 is above the 20, it's pretty safe to assume that this given asset is in an uptrend. And when the 10 is below the 20, it's incredibly safe to assume that the given asset is in a downtrend. So that was a lot of information in 5 minutes. What does this mean and how do we put it all together, right? So like I mentioned, I'm going to try and stray away from focusing too heavily on the basics today. And I really want to focus on, I'm going to call real world implementations of this kind of mindset, because there's so many incredible setups in the market right now, so many incredibly strong trends to be taken advantage of. This isn't something that you see every day. So what I want to do is essentially bring you guys down a line of thinking to determine, obviously we talked about really quickly determining the individual trend of a stock. I want to first start out by determining the strength of a given trend in the market, and then dive in from there. Any questions so far? All right, Norman, we'll look at setups later, bro. Not right now. You got to stick around and we'll maybe look at some of your charts later, closer to 7. And I can't get dinner with you on Thursday. I'm going to be in Orange County. But next week, I'll be around. Oh, it's Thanksgiving. Never mind. I'm not getting dinner with you on Thanksgiving. All right. So everybody good so far? No questions? All right. Let's keep it going. So a couple things come to mind when I'm first trying to figure out, I'll say, the strength of a trend in a given asset. So first and foremost, a strong trend in a given asset, especially at this time in the marketplace, matters so much more than the overall trend in the market. And what I mean by that is, for example, if we compare something that's been in an incredibly strong trend, such as like a firm, or even actually a SoFi is a really good example. SoFi is an excellent example. So let's clean this up a little bit. This look all pretty. SoFi is a great example of an incredibly strong trend. And the easiest way to spot a strong trend is by looking at the slope of the moving averages. And it might be hard to tell just based on how I have everything scaled, but the slope of these moving averages, meaning if you remember your basic algebra class, rise over run. So how high does it rise versus in the amount of time? Right now, the slope of the moving averages is incredibly steep. And I guess you could see an angle down here. It's wouldn't expect anybody to ever do this, but the angle of the EMAs here is 67.5 degrees. Write that down. Whereas if we take a look at the S&P right now, the angle of the moving averages is 43 degrees. I mean, this seems just like a joke that I'm talking about that, but anyway, it's a good point of reference, I guess. So comparing these two trends, SoFi is very clearly stronger than the S&P, which is generally representative as the rest of the market. And as a trader, especially as an options trader, it's our responsibility, and even especially short-term options traders, it's our responsibility to be involved in the strongest movers in any given time in the marketplace, right? Obviously, I think every single one of us in this lecture would agree, we all want a higher probability of being right on our trades, right? I think anybody, if I asked who wants to have a higher chance of making money, I think every single one of us would raise our hands and say, yep, that sounds like a great idea to me. And one of the easiest ways to do that as an options trader is being involved with leaders in the marketplace, not laggers, right? And it is super tempting to get involved in some names which you might consider to be a laggard. And even I fell into this trap. And I'll just talk about an example of what happens when you don't look to the leaders, which was a trade I took, I think, last week, where I got involved with Microsoft on what I thought was this breakout. So you could see it looked pretty decent, right? It had broken above all the moving averages, which looked like a mess right here. It broke above this longer term downtrend, broke above this shorter term pivot on decent volume. So I was like, okay, this is pretty reasonable, something for me to swing long on. And the very next day, I don't remember if this was Friday or what. The very next day, it gaps down on volume below every single one of the moving averages and blows out the entire plan. And it's like, okay, well, that sucks. And this is what happens when you're involved in laggards, especially in this marketplace, right? There's definitely a time and a place to get involved in names like Microsoft that are just still kind of sitting in the base while the rest of the market is trending. However, right now, the conditions of this market are not one of those markets, right? It is not the time to be getting involved in names that are lagging the rest of the market. It's just not, right? There's so many names with relative strength. There's so many high quality setups to be getting involved in. So there's really not a reason to stick around and wait for these laggards to get moving. And obviously, I fell victim to that. And it's something that all of you are probably going to get involved in too. I literally got long Microsoft last week. And obviously recapping that trade, it's pretty obvious to point to a reason why it didn't break out. It's a laggard, right? It's a laggard compared to the rest of the market. And I should have never gotten involved in it. And I'm happy to own up to that. With that in mind, some of my most successful trades recently have been ones like Affirm on the left and Amazon. And what do these two names share in common? Right? It should be pretty obvious. It is clear that these names are incredibly strong, right? And these are just two examples of names that are incredibly strong in the marketplace right now. But even if we go to a more clean drawing set of both of these, right? Every single indication on both of these names points to strength, right? Taking a look at Affirm first on the left, what do we have here, right? How can we break this trend down? Obviously, we have higher highs and higher lows, right? I don't need to call that out. Everybody can see that. Here, we had an earnings report right here. Affirm reported earnings. It wasn't received as well as the market anticipated. And as a result, we got a pretty significant move down intraday, about 10%. The most notable thing about this, though, is that after this earnings report, it still held this pretty significant pivot right here, right? This previous, I'll say, yeah, just a pivot, right? So it held this level right here. Now, I'll be the first to admit, I think the very next day I think this was the presidential election. I don't remember. When was the presidential election? 11/11? I don't know. 11/5? 2 weeks ago? I don't know. I don't really care. Anyway, no, actually, maybe there wasn't. No, I think actually there was no event that caused this, actually. So I don't have any excuses. Yeah. So the very next day, after holding this significant pivot, the stock continued massively higher. I mean, this was a 20-something% move in a single day. This has not happened, right? And when you see stocks trending with this amount of strength, it's a very good reason for you to be paying attention to it because these names continue to exhibit this amount of strength. And you can see how this played out recently, right? It stalled out a little bit, which is completely reasonable after a 20% move in a single day. Stalled out, volume dropped off. Then it came back right into the EMAs, right into the 10 EMA, bounced off the 10 EMA on volume, right? Bounced off on volume, and then continued higher through the previous swing high yesterday, again on volume, right? Which this should be screaming to each and every one of you, this trend is incredibly strong and buyers want in. And that's the beauty of technical analysis is it gives us a window into what the most significant buyers and sellers are doing in the marketplace, right? That's the one thing that they can't hide is ultimately they can't hide when a name is accumulating more shares or when more shares are being accumulated and when shares are being distributed, right? Volume doesn't lie, price doesn't lie. And as long as you're paying attention to those two, it's pretty easy to tell where money is moving in the market. And this is just one example of these trades recently. There's so many of these setups in the market, even throughout the past 6 months and even longer looking back. You'll see over and over again, the names with the most relative strength continue to be the most successful upside winners. Because like I mentioned, ultimately, right, you could think of this 20% day higher as the market essentially showing its cards, right? It's very clear that people want to buy this name at this point. I mean, you can't even deny it, right? A name moves 20% higher in a single day. Affirm's, I mean, a couple $1 billion market cap, probably a $10 billion company, moving 20% in a day. It just doesn't happen, right? And this same setup is shown on so many different equities right now, especially within fintech, which we'll talk about, SQ, SoFi, UPST. Additionally, across some of our bigger tech names like Amazon on the right here, Tesla is a big one. Netflix, really obvious one as well. And you can see a lot of what these setups share in common is very clear strength in a strong trend, right? Netflix here, you have a similar move to A-Firm where you have just a disgusting FU gap higher, right? This is, let's see, a 10% move in a single day. Netflix is a, I don't know, $600 billion company moving 10% in a day. It just doesn't happen, right? This is the market showing its cards very clearly, right? And these are the signals that you need to be looking for because ultimately the names that are the strongest are pretty obvious. You just got to be looking and have a plan to get involved with them. Right now, this theme is so common. It's just finding these names with relative strength. These trades are everywhere. These setups are reoccurring over and over again in so many different sectors. So anyway, that's my long-winded introduction into why we should care about this. What I want to do is start focusing on some specific examples and dive deep into some of them, which I guess we kind of covered last week. But again, I want to reiterate, highlight, kind of recap what's going on here, and get everybody prepared to really start implementing some of these lessons into the rest of the week because this theme is not going away. And obviously, it doesn't mean to go get a second mortgage on your home and bet the home on it, but certainly a reasonable time to be getting involved in the market. That's for sure. Yeah, Raul's got a question. What does a yellow bar in volume represent? So that's a custom study that I have. It essentially, in short, represents high volume. So when volume is 3 standard deviations above the mean, it just highlights it yellow for me. So it makes it really obvious when there's high volume. Like you can see, it's pretty damn clear where the high volume was on this chart. On this chart, I mean, you can find it pretty quick, right? You can see when buyers were the most interested in this name. Not very hard to identify there. MSTR is the NYSE. Yeah, that's right, Lambo. That is right. So any questions, comments before we dive into some more specific examples? I want to make sure we address everything. I know I covered the concept of trends and kind of the basics really quick, but we've had these lectures plenty of times. At this point, I don't want to keep repeating myself over and over. I know people like Husky who are coming to these lectures pretty much weekly probably don't want to continue to hear me talk about the same stuff. Have you seen X2 leverage single names? Yeah, I mean, obviously there's leverage individual equities. I think there's like a MSTR leverage name. There's Tesla leveraged. There's Nvidia leveraged, both long and short. Obviously, those names exist. There's a time and place to use them, for sure. Oh, there's a Netflix. Wow. Yeah. Yeah. There's a time and place to be utilizing leverage. I'll leave it at that. In general, though, especially those leveraged equities, there can be a reasonable amount of risk then, at least as it relates to long-term holds. Like if you take a look at something leveraged like triple QQQ, TQQQ, and then compare it to just the standard Qs, you'll notice Qs hit new all-time highs a couple of weeks ago. The 3x leverage did not. So it did not hit new all-time highs. So the leverage is 3x to the upside, but it's a little bit skewed to the downside. I don't remember the exact phenomenon. It might be called beta decay is what it's called. I can't remember. I looked into this a long time ago and I talked about it with River, but I think the phenomenon is called beta decay, where essentially losses on 3x leveraged or red days on 3x leveraged ETFs are more compounding than upside days. So for example, if you're holding something 3x leverage for the long term, it generally doesn't go incredibly. I mean, a great example of this is TNA, which is 3x leveraged IWM versus IWM. If we compare these two, IWM hit all-time highs last week, and we'll just zoom all the way out. Well, it effectively hit all-time highs last week, where TNA is 50%-ish below all-time highs. IWM is, I don't know, 10% off it. I think these are the highs right here. IWM is 2% off all-time highs. TNA is 50. So 3x leverage instruments do horrible during drawdowns. They do great in extended periods of upside, obviously, but drawdowns, they get absolutely stomped out. So you want to be real cautious about that. Like you can see from the lows to now, TNA is up 120% when IWM's up, I don't know, 40. But yeah, you would have had to get in, effectively at the low there. All right. Any other questions? Do I use scanners at all? Yeah, that's a good question, Lambos. We can talk about that. Any other questions about the charts before I switch to showing Lambo that? All right, we'll take a look at that real quick, Lambos. So yeah, I've introduced this a little bit before. This is effectively the biggest, I'll say, automatic scanner that I use, which isn't really a scanner. It's mostly just a kind of performance screener that shows you which sectors have been performing the best over different time frames. Generally speaking, when I'm developing a watch list, I'll look to the 1 week or 1 month performance leaders and figure out which names in specific have been performing the best out of the group. So in this case, it looks like utilities has been performing the best over the last week. So we could take a look in utilities. We could use this default screener that just sorts for only mid caps, names that are optionable, and then we need to switch that back. What was it? Energy? I already forget. Utilities. And then you can go to performance, sort by performance over the last week, then go back to the charts. And you can see our clear winners, VST, GEV, which is pretty much just Norman's watch list. So this is kind of a pretty easy way to start scanning for some of the strongest names. You can also see a quick overview of charts, so it makes it pretty easy to see what's going on. Obviously, GEV looks kind of primed right now. Let's see. Yeah, so GEV looks pretty solid. It just, oh wow, look at that. Came back down to hold this gap today. That was a nice entry. Yeah, GEV looks decent. Front just and we just found this from the scanner in, I don't know, it took us 2 minutes to get to this name, and we're already seeing that this has the most relative strength. Yeah, the website's totally free. I'm sure you can pay for it. I mean, you can see I have ads at the top. I can just send you this specific scanner that I have right here in the link. So yeah, these are the filters that I use. I think I found this from somebody else online, but it's perfect. It's simple. It's easy. It gets the job done. And yeah, I mean, you can see how quick we got to a name with massive relative strength, right? Right here. GEV broke out today. And we could even go again if we go back to performance, or I think I gotta go back to the bookmark. So we could even dig a bit deeper. Like if we wanted to look at what's been performing the best over the last month, we could take a look at consumer cyclical. So I go back to the scanner, consumer cyclical, sort by performance just over the last week, see what's been performing the best. And now we see MOD. This one looks like it just broke out today. SE. Oh, wow. That one came down and retested some support after its earnings. That looks solid. Tesla. Okay, obviously that's pretty much a given. Oh yeah, bros, that's an interesting one. So it makes it really easy to figure out the strongest names. I mean, as you can see, we've already seen some of them that maybe you guys have heard of, but yeah, it looks like this mod one is pretty interesting. This one doesn't seem like one I'd actually trade, at least in terms of options, but the chart looks very interesting. Oh wow, I have levels. Interesting. Yeah, this just seems incredibly interesting. This thing is up massive. Auto parts. You gave this to me, Norman? I said I didn't like it at 90. That makes sense. That was probably right around here, maybe. Who knows? It is a bit of a mess, but it looks good now. Sorry, Norman. Can't win them all. Anyway, yeah, that's generally the process that I use. Also, I'm looking through charts on my own and familiar with the relative rotation graphs. I don't pay attention to those much, honestly. Yeah, I just don't pay attention to them. I try to keep it simple. In general, there's no need to really overcomplicate things. It's pretty easy, in my opinion, to figure out which names are trending the best. It doesn't take too much. So I want to take a little bit of a step back and talk about how to understand the overall strength of a trend in the marketplace. So there's a lot of what are called breadth indicators. Breadth. I don't know if that's coming through correctly, but breadth with a D, not breadth. That essentially help you visualize what's going on under the hood in the marketplace. So if you take a look in the S&P, it looks like overall things are trending higher. Everything looks healthy. However, one of the kind of easier breadth indicators to look into is RSP, which is going to be your equal weighted S&P 500. And this essentially shows you if what the S&P would be doing if every single name held an equal weight in the index. Obviously, they do not currently. NVIDIA is like 5, Microsoft's 5%, Google is like 8, something like that. I don't remember the current weighting. But it's very heavily weighted to our mega cap tech names, right? It's about 20, 30% mega cap tech. Where RSP shows us a bit more under the hood of what all the names are doing together. So this can help you just get a good gauge on where the overall market is at. And you can see right now it looks pretty healthy. I mean, this trend looks very similar to the S&P so far. So I wouldn't have any really concerns on this, in my opinion, right? So just at a surface level, right, I would say just based on this graph, breadth under the hood looks good, right? There's nothing really to be too concerned about. The rest of the market is moving higher. And the reason that we care about this is a short saying, which I'm sure you guys have heard before, which is a rising tide lifts all boats, right? Even if you get involved with a laggard, which you really shouldn't be, but even if you do get involved with a laggard, if the overall market is moving higher, generally speaking, that name will also move higher just based on inertia, right? If the overall market's moving higher, generally speaking, even some of your lower quality stocks will move higher. Now, obviously, this isn't an incredible way to frame your trade ideas. But anyway, so that's kind of the first measure that you can look at to determine what the strength of the overall trend in the marketplace is under the hood, right? Just very quickly take a look at RSP. There's a couple more metrics that I like to look to, which I'll pull up here on, where is it at, Brett? Cool. There's a couple more metrics that I like to look to, which I'll show here on this S&P chart. So there's this advanced decline line, which this is pretty interesting. And then there's also the net highs and net lows indicator. So let's just zoom out over the past couple of years. And let's just focus on first when a time, or from a time when this flipped a little bit. Let's clean this up on it. Cool. So hopefully just from this zoomed out view, you can generally see the difference between a market in correction and a market in a healthy bull trend, right? At least as it relates to these net highs and net lows. When we're in a healthy bull trend, generally speaking, these net highs are expanding. We're not seeing many days with new net lows. And what this means, just to explain what we're looking at here in terms of the data, is the net highs and net lows graph represents the number of names hitting new all-time highs, or at least I think the way it might be calculated is new all-time highs for whatever period you're looking at. So all-time highs over the last 10 years versus the number of names hitting new all-time lows. And obviously in a bull market, you don't want more names hitting new all-time lows than names hitting all-time highs. So let's just kind of zoom in to the first time this really switched as of recent, which is right around here. I'll just make this even a bit larger for us to get a bigger idea of what's going on internally in the market. So one thing that you can kind of notice is for the most part in the bull market of 2020 to 2021, we pretty much never got multiple days of sequential new net lows, right? But all of a sudden we hit all-time highs. This was a day where we hit all-time highs and had more net lows or more lows than highs hit, which that's going to be kind of weird. Right? Then we pull back. We have multiple days of extended net lows. Then once again, we continue to move back higher, right? We're green on these days most of the time and consolidating, and we still have more net lows over net highs, which is obviously a red flag, right? This is not something that you'd want to see in a healthy bull market. And obviously in hindsight, it's really easy for me to go back and say, oh yeah, look, you could have gone short here. It's easy for anybody to do that. And it's not meant to be like a cut and dry indicator. However, you can see how this kind of trend reversed during the bear market of 2022 into early 2023, right? You can see how this trend is totally reversed, where for the most part, you would only get, small blips of new highs, right? Small amounts. Every single day, the market is dominated by net lows. You get tiny little spurts of net highs, but for the most part, it's all net lows. And check this out, right? We hit this all-time low at the 52-week low at 350. And then all of a sudden, right, price moves higher a little bit. And then all of a sudden we start to get extended periods of new highs, right? Which is not something that we had throughout this entire time frame, right? It looks more like this now. And you can see, obviously, this trend continued We had this extra period where maybe it looked like the market was reversing, where we had this extended period of net lows. Certainly a reason to be potentially cautious. But from here on out, there was no new instances of something like this where we have these extended periods of net lows. So this is definitely a really interesting way to gauge another interesting tool, I'll say, to gauge the overall health of the market, right? Me personally, I'm generally a long focused trader. So I'm going to be looking for opportunities to buy equity, buy calls, that sort of thing. And as a long focused trader, right, once you get this green light, when you start to see this extended period of net highs, you start to see kind of more breakouts developing in the marketplace. And obviously at this point, we're $100 off the lows on the Qs. There's a couple other signals to be mindful of here, some breaks back above the moving averages, et cetera. There's really no reason to be looking short for longer than a day trade or a short-term swing. So these longer-term trends in the market are really what I use to frame my entire bias. So me personally, during the bear market, I wasn't really trading very much. As a long focused trader, I mostly took a back seat. But once we started to get these opportunities emerging to the upside, that's when I began to become aggressive again and start really getting involved in trading to the long side. So moral of the story being, longer term trends are absolutely something that you should be using to your advantage in order to frame your long term bias, right? Obviously, in any long term uptrend, there's going to be significant pullbacks. But looking at this net highs, net lows, you can see even though price pulls back, 5% here, 10% here, 5% here, whatever it might be, there's no reason to really raise the red flag, right? It's a normal pullback and it's incredibly normal to have pullbacks and uptrends. So you have to be prepared for that. So that's kind of my take on kind of long-term trend identification. I also have this advanced decline line. This represents the number of names that are essentially green in the period that you're looking at. So the number of names that have appreciated in price or advanced versus the number of names that have declined in price. So for example, if the majority of names in the NYSE were lower than they were on this day, this line would be negative or this value would be negative. But in this specific example, the AD line is at 41K, indicating that there's definitely strong breadth. And what you really want to be looking for in this is typically like divergences. So for example, here we set a lower low in price. However, the AD line actually set a higher low, meaning that breadth had gotten better under the hood while we had this correction, which is a great positive sign. Here, for example, would be some examples of some minor negative divergences, right? Here we set a slight lower low in the AD line before this. And we also set a slight lower high in the AD line on this new high. So again, not a reason for us to really raise a red flag and start freaking out just yet. This is just a tool for us to add to our tool belt, be mindful of. But ultimately, all of our other trend following indicators are still pointing higher. So those are just some tools that I use to identify the overall trend in the market. And again, me personally, I'm less of a day trader and more focused on medium to longer term trades. So that could look something like 1 week to 4 weeks to even, years if I end up getting involved in something for that long term. And as a result, this is what I'm most focused on, right? I want to understand the long-term trend. And from there, I like to understand which names are performing the best in the present moment. And I'll look to get involved with those. And that's what we'll focus on for the latter half of this lecture. Do you guys have any questions or comments on this? All right, while we wait for questions or comments, we'll look at SKYY. Cloud computing. Oh, yeah. I had recently learned about this, Norman. Yeah, so cloud computing and quantum computing is a really interesting emerging trend right now. There's a couple names maybe you could look into: RGTI, IONQ. Those are the names that I know off the top of my head. RGTI is interesting, though. Yeah, this looks pretty solid, though, Norman. I mean, it's clearly strong. Zoom out a little bit. Okay, so it's just came right back into its prior all-time highs. That's obviously going to be important. Okay, so a little bit hard to get involved right here necessarily, considering we just topped out right there. But for a short-term trade, it wouldn't hurt to get long maybe above that gap into the 120 area. Yeah, Barrow, that's a very interesting question. So the question is, how do I screen RSP for taking a S&P 500 swing trade? So me personally, for the most part, I don't actually trade the SPY. And over the last couple of weeks, this might sound bad to some of you, but I've actually kind of stopped caring about what the SPY is doing because I know that my names are working and exhibiting relative strength regardless of what the SPY is doing. So my watch list right now doesn't include the SPY. It doesn't even include the Qs. I could probably read it from memory. It's Coinbase, Affirm, SQ, SoFi, Hood, and Tesla. That's my watch list right now. So those are the names that I'm monitoring on a frequent basis. Now, obviously, I'll check in on the SPY, but at this point, it doesn't have much weight in my decision making. I know it's in a long-term uptrend, and that's about all I really care about. If it has a good day, a bad day, it doesn't really make a difference to me because the names that I'm trading are pretty disconnected from what's going on in the rest of the market, right? They're exhibiting relative strength even more than the SPY, even more than names in the SPY. So again, this might sound bad, but truthfully, I'm really not super concerned at this point in time on what's going on with the SPY. I know it's in an uptrend, but it's just not the most. It's not giving me the highest risk to reward, really ever for me. Just not how I like to trade. Does that make sense? I think fire last that one. I know, Norvin. All those are pretty clean. Cool. Any other questions that we can cover? Everybody feeling all right so far? I've been really hopefully beating these names or beating these ideas into everybody's head over the last couple of weeks. I mean, this continues to be the most important way to be thinking about the market right now. Hands down, right? This is what's making money is following these names with relative strength. You can't really deny it. So I really want to make sure everybody's on the same page with me. And I don't want to make it only focus on making money, right? There's obviously risk involved with every trade. So I don't think that you can just blind slap anything that's strong and close a computer for the day. Cool. All right, let's keep it going. So bringing this all around to kind of summarize the point that I'm trying to get across and analyzing this, we brought up a couple examples of some names that are incredibly strong. And I want to probably talk about SoFi as it's one that I actually recently got involved in, actually today, funny enough. So SoFi, there's no way around it, right? This name has doubled in 30 days. It's ridiculous. With that being said, I've had to retrain the way that I think about things a little bit and not be scared to get involved in names like this and not be scared to re-enter on names that I've previously sold because the trade is still completely valid. So when I'd sell and think, okay, maybe it's done here and I'm wrong and it consolidates and moves up for the next leg, I can get back in, right? And SoFi is a name that is part of a overall, I'll say, theme that is incredibly strong right now. So SoFi lives in kind of this weird fintech space or financial technology and also kind of crypto, I guess, because I think you can trade crypto coins on there. I don't even really know. But anyway, SoFi lives in this kind of fintech space. And if we take a look at some prominent fintech names, notably Affirm, zoom in a little bit, Affirm, Hood, and Square. You guys, and I think Lemonade, they do insurance, right? LMND. I don't know. We'll just loop it in because Norman keeps saying it. Well, yeah, sure. And Lemonade. All of these names share something in common, right? Not only are they all moving higher together, they also are all in the same kind of sector or theme. They're also all significantly stronger than the rest of the marketplace, right? There's nobody who can look at me and tell me that, I don't know, some of your more typical trading names are stronger than these fintech names. They're just not, right? And this sort of kind of niche theme focused move has been happening over and over and over, especially this year. It's been so noticeable, right? The first one to really notice over this first bull cycle was AI, right? AI kind of chip makers. So you have NVIDIA is going to be the number one winner from that, right? Then you have your kind of supporting manufacturers. So your AI cooling systems or sorry, VRT. You have what used to be Supermicro, which obviously isn't anymore. And now that's kind of transferred into your AI powering. So your GEV, your, what the hell are the other names that Norman posts in chat all the time? VST, that sort of thing. Anyway, point being, right, these sort of thematic moves have been happening over and over. I could probably name 5 right now. You have your AI, crypto names. That's an easy one, right? Your Coinbase, your MSTR. You have your fintech names, your nuclear names for AI powering, and I can't think of a 5th one right now. Anyway, that was close. I'll take it. So point B, oh yeah, Upstart's a good one to focus on too. Yeah, Upstart's in a similar space, right? That financial technology, kind of shorter term lending is another name that I don't know if you guys saw me set the alert earlier today, but or at least earlier in this lecture, but this is another name that I'm looking to get involved in. So what I'm focused on right now, my whole kind of trading strategy is looking for names with relative strength on pullbacks. That's it. Relative strength on pullbacks at reasonable spots. So for example, you don't want to buy something when it's over 10, in this case, 30% extended from the EMAs. That's just never a good idea, right? That's ridiculous. However, something that pulls back into the EMAs, one thing that you'll notice with these names with significant relative strength is that first pullback into the EMAs, 9 times out of 10 is going to get bought, right? Let's just look at a couple examples right now. Upstart, A-Firm, SQ, right there. Tesla, Hood. That one didn't even make it back to moving averages. SoFi. Yeah, that didn't even make it back. That's crazy. Wow, Norman's going crazy. Let's see. PLTR, his ideas. Barely made it back. MSTR. A recurring theme is that these moving averages are your best friends in strong emerging trends. This is where the market gets involved on these names again. I mean, you can see it over and over. Go back test every single massive winner from this year. This is where the market gets back in. Your 10 and 20 exponential moving averages. These are your gauge to the pulse of a given stock. If it continues to get bought up at the 10 and 20 EMAs, if it continues to move higher on strong volume, continues to have massive relative strength over the rest of the market, why are you not getting involved, right? Why are you not looking for these entries where price consolidates a little bit and you can structure an entry, right? The key is also low risk entries, right? Because when you're entering on something that's over 100% appreciated in a given year, it feels a bit ridiculous. So you need to structure your risk in some way that's a bit reasonable. So for me on SoFi, what I did is I had one level that mattered to me the most, which is this IPO high, right? If we zoom out, back, we take a look back here. This was the high that the stock hit after it IPO'd, 1394. And I have my targets above. They're just weekly pivots, right? That first weekly pivot into the EMAs, that weekly swing high right there. Zooming back in all the way down to, let's just say, the hourly. What I did, the way I structured my entry today, was we got this break back above the IPO high yesterday on Monday, pulled back and ended up closing, I think, just at it, right? Just at that IPO high, almost that first close above. So today we gap below it. Pullback is nice, right back into the EMAs. We closed above it. I entered here. You could also maybe draw some little consolidation, something like that, maybe. Yeah, Reddit's a good one too. Reddit's a good example. RDDT. I mean, it's so common. And look how simple you can structure these trades, right? Find a significant pivot. Let's probably zoom into the hourly for this one. So I'll just mark the low real quick. Reddit, it pulled back into the EMAs here, right? You don't need to be bottom ticking this one. You can wait to see it bounce back off the EMAs. It's not about getting in at the dead bottom. This one's pretty simple. Quick little consolidation that you can draw down here. Here's your entry. Hourly close above. There you go. Done, right? You identified that pivot that it held. Obviously, you might think that you're chasing a little bit, but realistically, you're not, right? As long as you're structuring your trade in a reasonable way, trust the price action until you have a reason not to. These names are in massively strong trends. And if you zoom out on the weekly time frame for some of these, a lot of these names are just getting started. Now, Reddit is a bit of an outlier, but if you look at something like Hood, if you look at something like A Firm, this name used to be 140. And while prior price is no indication of future price, it just goes to show the amount of room that this name could potentially have. SoFi, same idea, right? Up to 20s. It has plenty of room higher. And while it's extended in the short term, there's no way around that. We can still continue to trade this momentum, right? As options traders, these are the conditions that we're looking for, right? This is what we want. We want the short term momentum because this is where I'll say, actually, I don't want to say that. I'll just say what I was going to say. I was going to say this is where it's easiest to make money, and I'm not trying to get people all fired up to go full for it. But this is truly when conditions in the market are easiest, right? It's so good that you feel like you're a genius, even though none of us probably really are. But you definitely feel smarter than you should be, and you have to make sure you keep that in check. But that's really the big idea. God, Norman, you got so many tickers going in your head right now. I have to keep on. Yeah, this looks a bit interesting. Kind of a bit of a mess on the daily, though. But I mean, yeah, you can get involved. Similar idea with this long-term base. Anyway, that's a big idea. What are your guys' thoughts? I talked a lot about these base breakouts, I think, so I don't want to go too much in detail, but some of the most interesting things that I'm watching now that I'm not yet in are SQ. This one's massive base breakout. You can see I made it pretty damn clear what I want to do above that level. Upstart, I'm a little bit less interested in this one. I'm more interested in SQ than this one. This one got a bit freaky, but we'll see. Maybe I'll get involved with it. What are your guys' thoughts? Questions, comments, concerns before we wrap this one up? Do I post somewhere in the Discord for your trades? Yeah, it was funny. I posted my first trade in the staff ideas tab. I haven't posted any actual trade in the server in, I mean, probably 6 months. And of course, the first actual trade that I post gets slapped, which was pretty funny. But that's just how it goes. So yeah, I post a little bit in the staff ideas tab here and there. Is there a reason for not posting trades? None in specific. Yeah, for a little bit, I was taking kind of just a break from the market. I started a new job and was trying to just focus on getting that in order. And I moved as well. So it was a balancing act between trying to get my schedule correct, trying to get my priorities right. I lost track of a lot of the habits that I was previously doing. So I really just needed what I did recently is I spent 100 days starting in August, just getting everything back in order. And I finally feel like I have everything back together. So, but no specific reason. I don't post trades really. HWM long-term play. Let's look at HWM, Norman. HWM. Owlnet Aerospace. Why is the volume blue? What the hell? I've never seen that. That like broke the study somehow. That's weird. Yeah, I mean, Norman, this looks good for a day trade. This is a pretty clear example of a strong trend. Um, yeah, I mean, probably not at the place where I'd be interested for like a long-term investment, but I mean, that's kind of your pivot right there that we closed above. Looks fine, Norman. Clearly strong. Oh, wow. Whoa, this thing's been around for a long time. Oh, this is actually a pretty big breakout right here. Wow. So nobody really traded this thing until 2017, huh? Very interesting. 53 cents is what it started off at. Now it's at $116. Crazy. Yeah, it looks all right though, Norman. Definitely just experienced a massive breakout, breaking prior all-time highs from years ago. So, I mean, it looks pretty good. NVIDIA. Yeah, let's take a look at NVIDIA. This one should have had a pretty good day today. I think they have earnings. What is it? Thursday? Yeah, earnings. Earnings tomorrow, right? Yeah. Yeah, earnings tomorrow. There's only so much for me to say about it going into earnings. In terms of structure and trend, right? It looks great. It's NVIDIA. This is the strongest name in the entire marketplace. But going into earnings, there's not too much I can really say about it. Uh, Anything can obviously happen with earnings. In terms of how the chart looks, it looks great. I mean, this is not bearish at all, especially considering the fact that it had this little fake breakdown where it broke back below this prior pivot and now reclaimed it today with this nice strong bar. It looks great, honestly. But I would play it into earnings personally. Duolingo, yeah, I'll check that out. Duo. Yeah, I mean, this name's strong. This looks like an example of a strong name. This is very clearly a strong trend. I mean, no other way around it. The daily's a bit messy for me personally. Um, but I mean, it's tradable probably over. Wow, look at that. Tradable over today's high if you wanted it. Yeah. Yeah, I'd say it's tradable over today's high if you wanted to get involved there. Looks good. Looks like it wants to break out, head back to this 330. How about Spot? Yeah, Spot I was looking at recently. I wanted to add it to the watch list, but I decided not to. This is a little bit extended for me right now. I'd like to see it come back down to the moving averages personally. But this is going to be an example of a pretty nice future continued winner. I mean, obviously this thing's up massive, but it continues to look strong. Also setting new all-time highs currently. I'd be interested if it came down to this level right here. Oops. If it came down to this 445, I'd be interested in getting long, especially if that 445 lined up with the EMAs. Yeah, I would not play. I personally would not play Nvidia into earnings. I just typically try to avoid that if I can. Yeah, ServiceNow is interesting, huh, Norman? That one's been on a heater. What's a sign to look to for trend reversal and to exit the position? Yeah, excellent question. The biggest kind of piece of advice that I could give you is sell into strength when you can, rather than sell into weakness when you have to. And a shorter way to say that is sell when you can, not when you have to. So, generally speaking, when you enter any trade, you should understand where potential levels of resistance will be. You should not be just entering willy nilly. Oh, this name is strong. I'm going to get long. That's not how this is going to work, right? So, you should first identify where some longer term exhaustion points may be. And as price approaches those long term exhaustion points, you should really consider starting to take a trim, right? And you also need to use some of your judgment, right? There's not always going to be a hard, fast rule when to sell. But if a name like A Firm appreciates 20% in a single day, I would be an absolute idiot if I didn't sell some at minimum, right? So you have to use some common sense. A stock increases 20% a day. If you think it's going to do the same thing the next day, you're probably not thinking very clearly. So things like that, I'm always going to be trimming. I'm always going to be trimming into key long-term pivots. In terms of identifying exhaustion, there's a couple ways. Generally speaking, one kind of rule of thumb that I've started to look for a little bit is multiple extensions away from the moving averages, which is starting to be what we're getting on A firm. Again, I'm not saying that there's an impending reversal, but these significant extensions from the moving averages certainly do lead to kind of longer term consolidation periods, especially when they're so close together. Obviously, another big important way to identify is just by looking at reversal bars. So Upstart's a good example of one, right? You have this long wick to the upside, bull bar or bear bar closing near its low on elevated volume. This is not a bullish candlestick to be seeing when you are 20% above the moving averages, right? Which goes back to my point. there's absolutely zero reason why you shouldn't be selling Upstart if it's 45% on the day. I mean, you're just crazy if you're not selling there. I really don't know what to tell you if you're not going to trim a little bit when a stock moves like that. I mean, that's just going to end up being a personal issue there. But anyway, yeah, that's a big idea. Any other questions before we call it for a night? All right, Norman, what do we got? Docu low volume. Let's see. No, it's not too bad. Just generally low, but it looks good. I mean, this looks like every other relative strength setup in the market right now. It's crazy. I mean, every setup looks the same. It's hard to pick. You really got to narrow it down. You can't trade everything. Yeah, I mean, right now you got to really try and narrow in your watch list. Really focus in on something and just find the best trades. And yeah, what you could do is narrow things down. Maybe if you're looking for flow, maybe if you're looking for elevated volume, if you're looking for that sector theme, that definitely helps a trade stand out over others. D Dog, yeah, I mean, you got to be getting long here, Norvin. Any retest of 131, you got to be long, right? I mean, it's pretty clear. You got to be selling those longs at 134.65. You got to be selling more at 138.50, but you got to be long here. I mean, this is what we talked about, right? Breakout on high volume, especially after a couple fake breakouts. I mean, this thing's probably got a lot in it. Yeah, I mean, I would not be very surprised to see it at 140, especially after the action we've been seeing. Definitely not be surprised to see it at 140, and I really wouldn't be surprised to see it at 160 by January, honestly. Would I check grab? Yeah, let's take a look at grab. Yeah, Jesus. Wow. I have not seen this before. Holy crap. Wow. Yeah, I mean, this isn't the place to enter. Obviously, up 10% on the day. We got to wait for some sort of retracement, which we got right back to this prior pivot, which was perfect. Yeah, I mean, this is a massive base breakout. This is not bearish for sure. I'd be looking for it to move up to $6 area. And then whatever this is, 812. And then if it can clear that, I'd be looking to the 1320 area. Yeah, this is really interesting. I never heard of this name before. I mean, the volume is telling the whole story, right? I mean, you see that volume, you know what's going to happen. This thing's going to go higher. It's not going to go up in a straight line, and I definitely wouldn't be getting long right here. But yeah, pullbacks are going to continue to be viable on this one. Honestly, only way around it. Two-wheeler Uber in Indonesia. Yeah, it's really cool. I mean, it looks super strong. Let's look at SQ. Yeah, SQ, it looks great. I mean, this thing is loading up for something a pretty massive move. Yeah, I'd be interested to see it retest this 90 at this point. Now that it's really kind of dominantly broken above it, maybe today was the opportunity for it. It's a bit extended from the moving averages, which is really making me hesitant. I just don't know if now is the place to be getting involved after a day like Monday. So I really want to try and be patient on this one for now. I think it's a bit extended, but it looks good. I mean, there's no other way around it. If I was in it, I would certainly be happy, but I don't. I just don't know if I can bring myself to enter right now. All right, everybody. I think that's going to do it for today. As always, appreciate you guys' time. This was an awesome lecture. If you have any comments, questions, concerns, you guys know where to find me. And with that being said, hope you guys have a great rest of your week. And I'll see if I can get some more things posted in the server for us to all look at. Awesome, everybody. Have a great night. Good to see you all. Good to see you again, Husky. Adios, everybody. Been a pleasure.